Today I'll be presenting the Grit Real Estate Income Group investor presentation. My name is Bronwyn Corbett. I am the CEO and co-founder of Grit, and I will be going through what the investment case is, the story of Grit, and what the investment strategy for Grit is. Grit is a real estate income business focused on the African continent, ex-South Africa. It focuses on commercial real estate across the African continent in really various sectors. So the investment strategy of Grit is really clear. It is multi-geography, multi-asset class, focusing on the strength of the underlying tenant base. And as you can see from this slide, Grit has over 92% exposure into multinational tenants across Africa. We are currently invested in 8 African countries. We have an occupancy of the commercial real estate portfolio over 97%. To date, we've paid 12 consecutive distributions. Our asset base is over $850 million, and we sit on an annual escalation growth rate in leases of just over 2.5%. So the Grit investment case, which has really been in existence for just over 5 years, is multi-geography. In the next slide, I will show you the countries of investment. Multi-asset class, so if you can see from the left-hand side pie chart, you'll see that we have exposure into a multitude of sectors: retail, hospitality, light industrial, office, corporate accommodation, and a real estate investment into Botswana itself. So from a multi-geography perspective, the Grit investment case is really paramount around the ability to invest in investment-grade Africa. Countries like Morocco, Mauritius, Botswana are seen as investment-grade. The ability to invest in growth Africa with some primary exclusions. There are 54 countries in Africa. Grit invests in 8 of them. Growth Africa are countries like Ghana, countries like Kenya, countries like Mozambique. And as you can see from the right-hand side is the fact that we only invest in high-quality tenants. And you'll be able to see from that slide how paramount high-quality tenants are to the investment case. And even though you might see Mozambique from a macro perspective and from a credit rating perspective sitting in quite a poor status, the actual client base that we lend property to in Mozambique is quite superior. So the likes of ExxonMobil, Total, Hollard, Vodacom. So we have been in existence in the business, as mentioned. It was co-founded by myself in sort of really 5 years ago. The portfolio has grown significantly over that period with an asset base of just over $860 million. We have had recent acquisitions, the investment into a Botswana listed company, LRR, the Vale VDE residential compound in Mozambique, and the acquisition of Club Med Hotel in Senegal. We've got quite significant pipeline, the ability to deploy cash into further growth, which is enhancing assets of around $250 million worth of pipeline. What's very important is the business overview of Grit and reiterating the investment strategy. So the Grit's success and growth continues to leverage off tenant quality, diversification across Africa, the ability to secure hard currency leases. So are we able to secure euro and dollar leases and mitigate taking as much local currency exposure away from the investment case? And as you saw, Grit has access to leases with over 94% of its tenants being secured in hard currency. The ability as well that we have political risk insurance cover over our diversified portfolio that mitigates expropriation of funds. It mitigates a number of perceived African risks that we are able to insure against, and that insurance is quite important to have. So for us, the entire investment case, and the next slide will further depict this, is that we won't invest in any country in Africa. Again, 54 countries versus 8 countries. Why those 8 countries? We're able to secure hard currency leases, the political stability of the currency, the ability to move money in and out of the country, the ability to have key talented people as we control the whole real estate cycle across property management, facilities management, within the portfolio, asset management, and the key driver of relationships. So leveraging key shareholders, leveraging multi-banked approach, and leveraging multinational tenants across Africa. So if I just skip slide 12 and go on to slide 13, the value creation of the business is really about identifying strong assets across these particular regions, being able to acquire these assets below market, therefore enhancing shareholder value, the ability to effectively have a team on the ground that can asset manage these assets, effective tax planning, the flexibility and the sheer resilience of the team in the portfolio allows us to adjust to an emerging market type platform, the ability to give developers or developed market investors the opportunity to leverage on what I believe is the last frontier, and that's the African play, and the ability to leverage off the team that we've built at Grit to access those investments and access the growth of Africa is really, really important. So really around the importance of demonstrating what we have done as an asset management team is the fact that we have had significant investments in countries like Morocco and Casablanca. We've done significant refurbishment of those assets, that particular asset shopping center. We've expanded the GLA. We've done a significant re-tenanting on that particular asset. The Vale housing estate in Mozambique, not only have we been involved in the development, but the extension of that particular facility, which has created huge incremental upside to investors, as well as what we classify as commodity house, which has led to ExxonMobil in Mozambique. We've done a phase 1 and delivered on a phase 2. So this is really the value add, international corporate tenants, hands-on approach to be able to extract maximum value for shareholders. We have paid 12 consecutive distributions to date. That's quite important. Even through the COVID period, we continue to pay out a full distribution and we continue to declare a distribution. If you see Grit's performance to its peers across the globe and its dividend yield across the globe and what we've done from a payment basis, we far exceed our peers across the globe. So even though it's an African real estate story, the importance of the dividend and the importance of the 12 consecutive dividends is quite paramount to the success of the Grit investment case. What's really key is one, being an emerging market business, having significant pension funds that are invested in our business, and also the importance of being able to add value into these regions. So the importance of having ESG across environmental, social, governance, employing more than half of our staff complement being women, having sort of 33% of board members being women, myself running the business, really the only female-led listed business that's listed in Africa. So there's quite significant importance around the social element of our business. And then the governance structure, the importance of having a key governance structure for an Africa business. So we have a listing both in the stock exchange of Mauritius and a primary listing on the London Stock Exchange, with the idea that we will be stepping up from a standard listing in London to a premium listing. So really just the importance of our medium-term policies and guidelines. So we are targeting a 12% dollar return for investors. That is made up of a dividend yield of around 9%. So that is a distribution paid every 6 months, plus a net asset value growth that we see. The progressive dividend policy, the ability to buy back our own shares if we are trading at a discount to net asset value. We are targeting a loan to value of between 35 and 40%, and an upside to further increase the net asset value growth by having a involvement in pre-development development work across these regions up to 20% of the group. Really from the financial position perspective, what we can see is that our loan to value has progressively moved. That's been driven by the fact that we have taken on a little bit more gearing in relation to our equity trading at a discount. We have our portfolio independently valued on an annual basis. Our medium-term target still sits at 35 to 40%. which is quite important. And we do see that being achieved in the near future. So we have seen our LTV being impacted by acquisitions of additional units on our Vale compound. Furthermore, the acquisition of our Senegalese project using debt. And the importance of that is really to have seen the tracking up of the LTV, but the importance of that is bringing back to 35 to 40%. We are multi-banked, which is really, really important. We use a number of financiers across the region. This has proved to be really, really resilient and important over the period of COVID, where banks' appetite has changed in different regions, but we've continued to see banking support. Our debt expiry profile and the ability to secure longer dated debt is a continuous work stream from our Treasury Department. And we have done significant work because as a real estate company, even though not a REIT, we do pay distribution and we do leverage off a geared return. So hence the importance of gearing over the business from the 35 to 40% mark. We've seen the weighted average cost of debt significantly tracked down, which has really been really important. One, it's been the fact that we've been able to refinance some of our facilities on lower interest rates. We've been able to hedge out a significant amount of our debt, that the percentage interest rate hedge is sitting just under 70%. And we look at further enhancing by further instruments the reduction of our debt and interest rates going forward. These key financial metrics just really shows the how healthy our financial position is, really around the interest rate cover of 2.3%. The importance of various ratios, our operating cost ratio sitting at just over 18.5%. And obviously our admin cost line. Our admin cost line, we've seen that track up. One, because we have undergone and taken on significant other costs with relation to the step up in the premium listing, but that's once-off costs. And we see that number tracking down quite a bit over the next period. Managing the impact of COVID has become such a relevant concept for every business across the world. However, what we've seen is that the group portfolio has been mostly resilient, and that has really been demonstrated that we are multi-geography. Each of these geographies have acted in a different perspective. We've seen some of the African countries who've taken a view that lockdown is not possible. This is purely around the fact of a macroeconomic impact of lockdown in countries like Ghana, Kenya, to an extent Mozambique and Zambia. That has allowed our assets in the countries to operate continuously. And where we've seen a very harsh lockdown have been countries that have been having more of a European sort of influence, and that's countries like Morocco. So really, if you look at the actual overall impact on the GRIT's portfolio, corporate accommodation, industrial and office sectors, which is about 48% of our total net asset value, has seen actually very little and been completely unaffected. The hospitality sector, which is 19%, has seen some impact. However, we sit on very, very strong counterparties, tenants in both Mauritius, being Lux and Beachcomber, so we have seen them not as exposed because the government has provided very large support because of the importance of those two counterparties and the tourism sector to Mauritius. And our largest impact has been our Casablanca shopping centre, which only constitutes around 10% of the portfolio. We've actually had a lot of dealings and work, and the tenant support has come out, as I've mentioned, the hospitality sector and also the retail sector. And those that you can see and the impact of what we've had to do has been really, really important from an asset management perspective. The other key thing that we've done as a business going through a reinvention revolution, as I've termed, and a cost consciousness, is that we've actually really looked at the operational initiatives. We've seen the moratorium on all non-essential expenditure. We've managed to do a cost saving of about $3 million on our administrative costs line. Senior management and non-execs have taken a salary cut over this period. We are disposing non-core assets. Rental collections have been closely monitored. We've successfully collected for this period and this month over 92% of what we've invoiced, which is quite significant. So really, in summary, the grit investment case is really, just to close off, is really, it is emerging market Africa, a mitigated investment case of 12% total return, multi-geography, half of the portfolio in investment grade Africa, multi-asset class, very resilient to what we've seen as a global macro pandemic, and as in COVID, and we continue to pay distribution, and we continue to operate in these jurisdictions, which have had some impact by what we've seen, but have still continued to operate accordingly. So the grit investment case stands strong, and we're looking forward to the growth. We're looking forward to the step up from a standard listing to a premium listing in the UK, which further enhances the governance story. So thank you for listening to the presentation, and any questions, please advise us accordingly. Thank you.